What do these results
Good morning, Tom.
do you think about the prospects of the bank in the quarters ahead?
Well, I'm very pleased in that we've reported $29.4 billion profit for the first 9 months of this year. As you say, 7.7 for Q3. That puts us on a return on tangible equity of around 17% for the 9 months. Very pleased with the $3 billion buyback that we've announced today, up to $3 billion. That takes it to $7 billion for the full year. And I'm also pleased that we've announced another 10 cents dividend. In terms of the slight miss that people have talked about, I do want to draw attention to the fact we booked some treasury losses on some treasury instruments because we were seeking longer duration, higher yielding treasury instruments. And that loss of 600 million that we booked in Q3 will be fully recovered over subsequent quarters. So that's all about our hedging strategy rather than an economic loss. It's a timing difference between a loss today and future profits over subsequent quarters. I think we're well positioned. We have a good momentum in the business. And I think that's evident in our wealth performance. Our revenue was up 6% in the quarter. Our trading assets or our wealth balances were up 12%, I think. And we took in around about $34 billion of net new invested assets in the quarter, bringing our total growth in our net new invested assets to around about 77 billion for the past 12 months. So that's good momentum in diversifying our revenue stream.
No, on the buyback, it does come in higher than the estimates, $3 billion US dollars. You know this better than most. Investors always want more. Is there scope for more, Noel?
Well, listen, we've got very strong capital generation at the moment, as you can see in today's results. We've also announced when we sell our Canadian business in Q1, it's our intention to do a further special dividend in Q1 of 21 cents. And then we'll consider what we do with the remaining proceeds of that disposal. So I think we got good capital generation this year and good capital generation prospects for the next 12, 24 months as well. I think we're in a good position to reward our shareholders for their patience and loyalty over the past few years.
On the Canadian business, there has been pushback from the opposition party, the main opposition party, the Conservative Party in Canada, around RBC taking over this Canadian business. What gives you the confidence? You've reiterated you think the deal does get done by the first quarter of next year. What gives you the confidence that that indeed does come to pass?
Well, we're having good dialogue with the Canadian authorities and the regulators. We're confident that the deal will close in Q1 of next year. And we continue to work on that basis.
I want to talk a little bit about the China part of the story as well, Noel. You did book some charges there of around, what, $500 million US dollars in terms of provision charges on some of the losses there. And you've talked about, in the statement, the uncertainty in the commercial real estate market of China. How do you see that story evolving? Is it fair to assume that further charges of about that size and that scope are going to be coming through in the quarters ahead?
Well, I think we signalled at the end of last year that we had a plausible downside scenario of a potential for an extra $1 billion of ECLs on our China real estate exposure. If you look at what we've done in Q3, $500 million, plus what we took in the first half, we've booked around about 800 million of that $1 billion plausible downside. There is the potential for a top up to that and book the remaining of the billion in Q4. But I think we're relatively comfortable with where we sit at the moment on our provisions. And by the end of this year, we'll have been well provided on our exposures in China. Clearly, it's an evolving situation. We'll keep it under review. But we think we're going to be in a good position by the end of this year on our provisioning.
And what is your team on the ground in China telling you about when they think the commercial real estate crisis is going to end, is going to bottom out? At least, is 2024 a realistic prospect, Noel? What is your sense at this point?
Yeah, I mean, I think the market, the commercial real estate market in China has had a huge policy correction. And I think we are at the bottom of the market, but it will take quite a while for that market to recover and regain momentum. So I'm not expecting a massive reversal in that sector in the next 12 months or so. But I do expect it to be a gradual improvement from where we are. I am encouraged by some of the policy measures that were announced recently. They will take time to have effect, so I'm not expecting a rapid turnaround. But I do think that we're at the bottom of the market, and we'll now have to have a slow recovery. And I think that is a very determined slow recovery, because I don't think that the authorities would have done what they've done with policy correction, then to do a quick reversal from here.
Operating expenses up 2%, Noel. Part of that down to technology investments, part of that down to performance-related pay. How do you see the cost picture evolving in the quarters ahead?
Well, let me just clarify. For the 9 months year to date, our operating expenses are actually down 2% on a reported basis year on year. And in the quarter, they were up 1% Q3 to Q3. But what we did is we set ourselves a target, because last year we had some one-off restructuring charges. We set ourselves a target of keeping our cost growth to around about 3%. Now, in the quarter, we've signaled that we have going to move that 3% to 4%, because we have allowed some additional digitization and IT spend to come into the P&L. That's around about 1% or 300 million. And we have signaled that potentially in Q4, because of the very strong trading performance of the business, we may well top up our variable pay by an extra 1% or 300 million. Now, I just want to put that into the context of a business that has reported 29.4 billion profit in the first 9 months of this year. We think they're two sensible decisions to take: continue to invest in technology and digitization, and reward our people for what has been a very strong performance in the year and over the past 3 or 4 years in restructuring the bank. And that goes alongside what we're doing with dividends and buybacks for our shareholders. We remain very focused on cost. Sorry, Tom, we do remain very focused on cost discipline. And we're really trying to drive our investment in cost into digitization and technology rather than just headcount and headcount growth. But we remain with a very strong cost discipline.
OK, I need to ask you about the geopolitics of the moment, of course, the Israel-Hamas conflict. You are the biggest international lender in Israel. Has the conflict, has the crisis in that part of the world, has it impacted the business? Has it impacted operations for HSBC in Israel? Are you changing anything on the ground there, Noel?
Well, it's heartbreaking to see what's taking place in Israel and in Gaza. The loss of innocent lives is absolutely heartbreaking. We are not changing our strategy in Israel. We're not changing our strategy in the Middle East. We will continue to support our people, our clients, in these extremely difficult times. Most of our clients and people have been affected directly or indirectly by what's taking place. And for that reason, we'll do everything we can to support them. We all hope that there will be a political solution to try and de-escalate and contain this situation, and that can be forthcoming.
Noel, on the macro front, a number of big central banks, of course, making their decisions this week, the BOE, the Fed, the BOJ. What is your sense of where we are in the rate cycle? Are you in the sense that we are now at peak rates? Are you in the higher for longer camp? What is your assessment?
Yeah, I think what's coming around the corner in the next few days is probably a hold position, because I do think we're at a level of interest rates now that we need to give them time to work on the inflationary environment. So I do believe it will be hold. I do believe it's higher for longer, because I do think there are underlying inflationary pressures still in the global economy as a consequence of supply chain repositioning. The unit economics of supply chains are not as favorable today because of supply chain repositioning as they were a few years ago. So I think it will be higher for longer.
And of course, the rate environment has to be factored in when you're thinking about acquisitions. You've made a number of bolt-on acquisitions, Noel, over the last few years.
Yeah.
Do you continue to see appetite? Are there prospects out there still? And kind of what is the size and scope of any deals you may be looking at?
Yeah, I do think there are still opportunities, and most of our acquisitions have been around revenue diversification and skills acquisition, particularly in our wealth business, particularly in Asia. Bringing in new distribution capabilities, bringing in new product capabilities. That's evident in the deal we've agreed with Citibank on their China wealth business. That's all part and parcel of our revenue diversification strategy, and allows us to accelerate are growth opportunities, particularly across Asia. I think there'll be bolt-ons rather than significant acquisitions. I think it's right to continue to build out capabilities via bolt-ons. And what I look at it as is acceleration of organic growth, supporting what is a core strategy, but doing it faster and more effectively.